What's going on, guys? This is Richard from TraderLion, and in today's video we'll be talking about market corrections and more specifically what market recoveries look like in terms of price and volume action of the major indexes. And specifically we'll be looking at the 2018 case study after the September 2018 correction, which was 19.8% deep and lasted 95 days. And the document we're looking at right now is completely free and available on the TraderLion website, and it basically includes historical corrections going all the way back to the 1990s, 1980s, and this is a really valuable resource in my opinion, especially if you haven't gone through a lot of corrections yourself, and you can basically look at all these different charts and train your eye so you know what to look for and what to expect. And that's pretty much what we'll be going through today in terms of the 2018 case study. And let's go ahead and set the stage and talk about how this correction started. So first up, we've got a nice trend above rising key moving averages. This is a nice uptrend. A lot of money can be made in this area, but then we have a little bit of changing character, some stalling days, and a break of this prior base pivot and a break of the key moving averages, which then start trending downwards and price starts trending down below these declining key moving averages. So this is really when the market changes character. You want to be mostly in cash, and most likely a lot of your stops are getting hit if you are a trader. At this point during this correction, volatility increases, and we have a bunch of oversold pops into the key moving average areas. And this is why you don't want to get too excited when the market goes up 4%, even 5, 8% within the context of declining moving averages, because likely it's just an oversold bounce and there hasn't been a definitive change in character yet, and the market just isn't ready yet for a new uptrend. So at this point, we have a bunch of oversold rallies into declining moving averages, and we basically decline 19.8% from the top. All right, so moving on to what the recovery looks like, you can see we had one final leg down from this oversold rally into the moving averages, and we actually had the highest volume pretty much during this entire correction right near the bottom. So this is often what happens. We see a big flush out, a lot of volatility right at the end, and then a big hammer candle or a day like this where we finish green and right on the highs. However, keep in mind that even if this is a rally of 5, 6%, you shouldn't get too excited, and this isn't the optimal risk reward spot because we're still very volatile, and this still could just be an oversold rally like we saw previously. But what's important to keep in mind is even if we get a bar like this and it's up 5, 6%, you don't want to get your hopes too high, because this still could be an oversold rally back into the key moving averages, and we haven't yet seen a change in character in the market. So what you want to look for is volatility to contract, bases to form in leading growth names, and maybe even as it's made a lower low, you're kind of keeping an eye out for stocks that are making higher lows and moving up the right-hand sides near all-time highs during corrections. That's really what you should be doing, keeping a list at this point. And when we do get this higher low, that's kind of the first really optimal risk reward spot to start entering and practicing progressive exposure and placing test trades in those leading names. And here, after this higher low forms, we get that fall through day signal, which if you follow Can Slim, marks the start of a new potential uptrend. And from this point, we progress and then see that changing character. You can see how volatility contracts, we get inside days, and the price action gets a lot more normal. It's not this kind of emotional up and down, no real rhyme or reason here where we gap up, gap down. That's a very basically difficult time to trade and manage risk using stop losses. But once we get this tightness, that's really where we can start entering positions and managing risk in logical spots. So at this point, you want to be kind of scaling in using progressive exposure into those leading names, as I said, and you can see a few notes down here that definitely you should check out. And you want to focus on the stocks that are breaking out as new all-time highs out of proper and sound bases on increasing volume. And ideally, those stocks are in overall groups that are advancing as a whole. So focus on leading stocks in leading groups that are breaking out of sound bases. From this point, we get that changing character once again, and it starts looking a lot more like this trend right here, where we get back above the rising moving averages, the short term, as well as the 50-day, and we have a really nice run off these lows after that fall through day before we enter a new correction, new corrective period, which is a lot shorter than this one and only has 1, 2 legs down. But this is pretty typical here. We've got that flush out, higher low forming, and that's really the first point where you want to be looking for potential entry points, especially if volatility is contracting. and you always want to keep an eye out for those character changes. So overall, that's a quick run through of what a typical correction recovery looks like. Keep in mind, they're very diverse. That's why you should go through the rest of these examples and see the kind of variations and differences between them. But I think 2018 is a good example of the index forming higher lows, that fall through day signal, getting back above those moving averages, volatility contracting, and that's when you can start pressing on the gas and testing trades and practicing progressive exposure in those leading names in the market. So I hope you guys enjoyed this video. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And definitely go ahead and check out this article, which will be linked down below in the description and popping out right now. And with that said, thanks so much for watching, and I'll see you guys in future videos.